Ladies and gentlemen of the crypto space, we're live on a Friday, October 31st at 11:37 a.m. Now, the most important thing that I can remind folks is obviously a common thread that I talk about is time. It's not conviction, it's consistency of execution. And where are we versus where we've been and where we're coming from. So most folks look at headlines on social media and they see people responding to price. They see people responding to who leveraged losses or however many people are engaging, resulting in an emotional response, capital management. Now, the truth is very simple. Most people suck at capital management. They're shit at it. They're bad at it to such a degree that the vast majority of this country literally offloads capital management to other people. They literally just give their money to other people and say, "Please do something with my money and make decisions for me because I'm too fucking stupid to make them for myself." Now, I don't mean that in a personal way, and unfortunately, I guess that is a stereotypical type of statement. The vast majority are not qualified to make these decisions for themselves. That's a pretty shitty position to be in when we live in a time of AI where you can literally ask infinite questions and get infinite responses and have instantaneous access to infinite information. That's fucking shitty. And maybe I sound a little cynical, but I'm a little bit cynical, ladies and gentlemen. We're in a pretty shit situation as a population, as a people. And maybe that sentiment is best reinforced or stated from the perspective of a parent and how much time and effort and thought I put into what I hope for my children and what I do for my children and what I plan to encourage for my children and how I plan to educate my children to not sit around and be like, "Oh, please help me." No, you want something, you go out and do it yourself. You want something done right, you do it yourself. You figure out how to do it, you learn how to do it. You don't depend on anyone but yourself. Nobody can help you but yourself. That's it. So maybe today's stream is starting out with a little bit of encouragement. You want something done right, do it yourself. Manage your own capital. Don't depend on other people to fuck you over. 'Cause that's literally what the government does every day. They take your money every day and they give it to someone else who's too dumb to do it themselves. So they just redistribute your money to other people because other people can't figure out their own shit. I sound a little bit cynical today. I should smile when I say these maybe horrible things. Oh, that sounds really bad. I should smile and offer more constructive commentary. Like, I know it's really bad. And people need a helping hand. No, figure your shit out, people. Figure your shit out. Okay, so man, that there's a lot of twists and turns. Maybe that's why I've been using imagery of water parks, all the slides and going all over the place. And but that's how my mind works. And that's the story I chose to tell this morning on a Friday. Market looks good. It's just something you're not going to hear from everybody. You're staring at very little difference in how we've seen the market for the last week, obviously, since Monday. Last Friday, we talked, and last Friday was this green candle. We were up here at 114,000. We're now down here at 110,000. And the magic line of inflection is 108,343, which was set back here in December of 2024. Our level of resistance, 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 area, region of resistance, flip support signified or expressed as the perpy rectangle. No longer a perpy circle, must be a perpy rectangle. It is a region of resistance flip support. So to me, these charts look great, and especially considering the macro backdrop. We literally have reserves Have you heard the headlines? Seen the SOFR spreads and the reserves coming down and ending QT in December? Why? Because they need to increase liquidity in the system, and liquidity is obviously a very general term. Point being, what does that mean from maybe a simple statement standpoint? The central bank is the largest actor in the known universe financially. They're the largest actor in the global financial system. And when they're doing QE or QT, they are affecting it. They're either a buyer or a seller. And that has a general effect on the market with regard to capacity for the system to feel like there's an adequate amount of money available. And how do you feel? If you feel like you have an adequate amount of money available to you, either via credit or via ample deposits in a bank account, do you spend more or spend less? How do you feel? Okay, so that's literally the same thing at a global level. Imagine if at the world feels like, all right, they have access to credit. All right, we can make things happen. We can make some choices. We could expand our business. We could do some hiring. And when you apply that causally, cause and effect, knock on effects um, to the entire global economic system, you get a lot of spending and you get a lot of employment, you get a lot of salary, then people are spending, and that's the way economics works. So if you want to visualize it with the data sets that I look at, it's the move indicator, and that's where we are. We are closer than we've been in years to the sweet spot for the system to expand global currency supply, and that's when things get weird for crypto. You got to remember back here in 2020, the spike is what destroys confidence in the capacity of the system to finance financial activities. Credit evaporates instantaneously. And then all of a sudden, fear grips people. Oh, we're not going to have enough money. And then you get your dollar spike. And that's why when you have a blowout like this, the DXY rips to the upside because everyone's like, all right, we're not going to have access to money. We better hoard dollars. Because you're hoarding dollars, you're hoarding it because you're worried about energy availability. So obviously, forward looking, if you look at the move indicator and you look at oil down at 61, ah, this is exactly where we want to be for the system, basically going into exactly what we saw in 2020, this rolling bottom brush. Oh, hello. Okay, so let's see some rolling bottoms. And then that's when things will get weird. There's no other mechanic in play. And this is a forward-looking indicator. So as things start to roll over, or in this chart, um, it implies that in the near future, um, actors in the global financial system will start to feel differently and have a different capacity to access the currency they need to engage in the financial activities they're looking to engage in. It's generally what this chart means in verbal language terms. So between the DXY, the move, the 10-year, and oil, you get some nice uh, not confluence. You get good confluence suggesting where we're heading in the short term. And this is deflationary, by the way. Less energy consumption, less energy demand, oil prices roll over, and obviously that gets complicated because of OPEC and supply and demand balance, and their capacity to control production. So it's complicated. So what if the system wants energy prices lower? Well, that's an interesting consideration. And then you get into all the geopolitical collusion type of thoughts, and then you get into conspiracy theory type of thoughts. And generally speaking, that's a waste of fucking time. Oil down, move down, forward looking indicator, system about to turn on the global money printer. That's generally the simplest inspection to have, especially from a 2020 perspective. But we also have it from a 2016, 2017 perspective. Y'all, but that's the problem. Folks are young and they have goldfish memories, and If you're getting into crypto now, you have no memory of 2024, 3, 2, 1, 0, 19, 18, 17, 16. You didn't experience it. So you don't know what it was like. So you don't know what it was like in 2016. Well, it turns out in 2016, there was a raging ass bull market in crypto. It got ferocious. And if you look at the move indicator in 2016, it was rolling below the 200 down here. And there's 17 and there's 18. Okay. There's the move indicator. That was your bull market in 16, 17. There's 2021. And then you want 13? Oh, hello. There's a blowout. So here's 12 into 13. And 13 was down here. And then you, whoa, big spike. But guess what? Big double dip into 14. 13, 14 was your cycle. There's your cryptos. That's it. That's your entire crypto history. So everyone's like, "Oh, what's going to play out?" And this is all we have to go on. It's the entire history of the crypto cycles. Anything earlier was those old grainy videos of folks playing around with dial-up modems and barely mining Bitcoin. Oh, I just mined 15,000 Bitcoin because it's 2010 and nobody knows about it. So that wasn't a cycle. There was no market. You can't compare those days to what we have now. Frankly, you can't compare after this line. You can't compare after 2020. This is completely different to this. Do you understand? Pre and post 2020. It's a different world when you're trying to understand what the hell is going on in crypto. And I'm not going to spend too much time on that, but I've had those conversations, what it was like pre 2019. There was no market, there was no financial market, there was no financial activity, there was no currency, there was no emerging market, there was no credit, there was no business activity, there was nothing, 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 nothing. So if you dare for a second to even entertain a single personality in social media that can't tell you the businesses in crypto, and the concept of an emerging market and the concept of a financial system and what is currency and what is the difference between currency and money, you're listening to someone who's wasting your time and will not help you financially, will not help you help yourself financially, will contribute nothing positive to your capacity to navigate these markets in an intelligent way. Because post 2020, this is an emerging market of emerging markets. This is a financial economy, so you need to understand currency. You need to understand how money creates currency. You need to understand the conditions in which money is used to print currency. You need to understand, first and foremost, who prints currency. And if you still think the United States is the largest printer of the dollar, you will not most likely be successful managing capital. Because the vast majority, almost 90% of all dollars in existence, were created and printed outside of the United States, not by the United States, but by the Eurodollar banking system. Thank you very much. Well, thank you for coming to my TED Talk. All right, there's your commentary for this morning. I'll try and keep the stream short and concise today. $4,000 on gold. A heck of a reversal. Whether it's a local or a structural top, I don't know. I'd love to see a reversal down to 32. You get a nice mean regression down to 100 SMA 2700. That'd be comforting for an increasingly healthy rather than parabolic chart. Total T right on 1 trillion. Wild. There has been no bull market since 2021. Interactions with the ceiling. That's it. That's it. Period. Nice to see arrow back up at a buck oh 08. If you go in on the daily, you see some moving averages that are constructive. You guys know me, I hate looking at dailies, but that's all we got. It's a new asset. Fell with a little rip off the bottom. It was like 12% over the last, what, 10 minutes? Nothing constructive here. This is, if anything, bottoming out. Maybe this is blow off bottom territory. Um, maybe that's your bottom here. Maybe. Horizontal line. maybe. And this is just a divergence of where just pure and utter capitulation at the bottom. But if it was up to me, this has got to be some of the best tech in the entire crypto space, and very comfortable retaining exposure to this particular business. Curve hovering at 50 cents, structural mass, technical mass, in on the weekly, it's below that 100 SMA. Nothing looks good from a moving average standpoint, from a level standpoint. It's just a disaster as well. Obviously, there's some decent confluence down at 39 cents, but we're at 49 cents. So we're kind of in no man's land. Maybe we're talking about the lows of June of this year. That's kind of no man's land also. You got a little bit of confluence back in December of 22. Generally speaking, probably the best takeaway from this chart is something like this. All of this shit is just congestion and consolidation. And the fact that we're not down here at near zero territory, that's the biggest takeaway. Anything else, you're just digging for some sort of narrative that's just not there. Like if you zoom out, you're like, all right, fine. We're following the 100 SMA on the weekly. 200 is still trending down, but look at the level. Look at this perspective. Hide. Nope. Hide. And let's turn off. Let's do this. Okay, so that how's that for a curve chart? How many people on social media pull that bad boy up? So there's your curve chart, ladies and gentlemen. What do you got? You got a leveling out of the 100 SMA on the weekly for the first time in forever. Everything else is noise. In fact, maybe you have a little bit of bump up at the bottom here. Oh, hello. What does that mean? Okay, from July. If it's not trivial, July, August, September, October. That's a quarter of a damn year. So that is interesting. That is the largest increase from a 100 SMA standpoint in the history of this product, this business. Nothing compares in its entire history. So is this bottom? Okay, bit of a bump up here, but that everything was liquidating back then, 2022. Cheapers. When you start to see this 200 SMA roll over, we're going to be way into the dollars, $2 region. You'll be way up here by then. And the 100 SMA will be nicely trending upward, and you'll have 100 SMA, 200 SMA bullish cross. Let's reset my MAs. We have a 100, we have a 50 SMA, 100 SMA bullish cross. We are pending the 50 SMA, 200 SMA bullish cross. And there's your golden cross, as it's called, the golden cross on the weekly, and that'll be nicely constructive. Patience. Too many people are expecting things to happen quick, and that's the last thing they do. I'll end this monologue with the fact that the market looks good and most people are wasting their time overthinking things. Critical mass, hello. Fugu, good morning, Cab. Whoop whoop. IF, good morning, Cap. Much pleasure. Sir Joe. Techie Shorts, a million of ETH. It's time for up only. Well, I like Techie. It's a good guy. Been around. He's seen a lot. Hannah, always a pleasure. Always a pleasure. When everyone is going crazy, I'm chilling in the metaphorical sauna with the captain. Yes, the sauna, our minds cleared. We have to think differently. We have to be different. It's the only way to be successful. The vast majority are not. So we need to be different. It's all about the monologue for me, cynical with humor. Good company. Thank you. I appreciate that. I don't like to be negative. At least so I know it's cynical. Try and throw in a little bit of humor. I try and be, I mean, you see, it's positive. Be different. That's a positive take. It's just that the vast majority don't fit that category of being different. So I don't know. I thank you for appreciating it. I try really hard to be positive and uplifting and supportive and constructive and helpful, and but I know it comes off cynical. The last thing I want it to be is negative. So thank you. Crypto J, good morning. Much a pleasure. 110 Bitcoin. Oh, the horror. Oh, the horror. I mean, that is just one heck of a chart. You see, this is what some people look at, I guess. They're going back to 17, and I don't know. They don't see what matters. What, you got a 50 SMA mean regression on the weekly? It's not even a mean regression. So you had a mean regression back here in August of 2024 with wicks through. Mean regression back here in April of 2025 with wicks through. Mean regression, you didn't even interact with the 50. So this is, if anything, a more positive mean regression than these. There's a stronger mean regression because you didn't even interact with the MA. No wicks through at all. So that's what I like to see. And then obviously, probably the more important perspective is zooming in like this on the yearly. This is our year. We don't live in the past. We look forward to the future, but this is literally our year. What does the year tell us? Resistance, 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 support, resistance, flip, support. And that's something very similar that we had back here in 2024. This level of resistance, this descending, broadening wedge, and then the breakout to the upside. So we have this period of consolidation. The difference is in 25, we had this big retrace down to 76,000. Everyone's like, oh, something's going to happen with Bitcoin. It's going to go down. Bitcoin was at $76,000 in 2025. That's a dip. The crocodile Dundee. That's not a knife. This is a knife. That's a dip. There was your dip. A massive dip to 76,000 just last year to this year, right? Like, oh my God, it was this year. So people glance over these very simple statements. They're like, that happened this year. That's real. That's not. They trivialize like it didn't happen last week. I mean, it did have a nice dip. You had your liquidation down to 103, the biggest liquidation event in crypto history. Brought us down to 103,000. Bitcoin was at $76,000 in 2025. And all people could talk about was 3 weeks ago, the biggest liquidation. Who gives a fuck about liquidations? Who gives a fuck about people gambling and losing their money? That is not who makes a market. Those are the people who don't make a market. Those are the people who not to listen to. Those are the people who not to take advice from. Those are the things on social media to not look at to tell you what the heck is going on in the market. A $500 million liquidated in the last 30 minutes. All the headlines that we like to retweet about how Darwin was right this whole time. Those don't tell you anything about a market. Those tell you more so how our culture is broken, certainly how our education system is broken. Those don't tell you about the health and structure of this emerging market of emerging markets. Any thoughts on Alto Testnet? Nothing to have thoughts on until eventually it goes live and we see it actually work. I would hope. I'm dare I say, I would hope to see it go live soon. Yeah, it's been years. If it goes live, I'll be happy. Hannah, pleasure. Can you explain more about why you like gold going down to 32? What would be next? Mean regressions are healthy. So as things go up in price, at some point someone wants to sell. Um, it's healthy to see people capitulate and exit, and that drives the price down. And that's a typical staircase type of pattern. So this is the healthiest kind of market, up and down, up and down. That's the healthiest kind of growth for the growth of a price. But gold does operate on a different wavelength, and that's exactly why we're seeing the Bitcoin narrative change. Um, the treasuries that are accumulating Bitcoin, these companies that are accumulating Bitcoin have changed that narrative. And with gold, those are central banks. treasuries that are accumulating gold, and they're structurally repositioning themselves in global economics. So maybe this is more than enough down to 38 from 45. That is a massive retrace, almost all the way down to the 10 SMA and the weekly. So optimally, we do see this buy and sell, where you get that traditional staircase pattern. Um, but we won't necessarily get that on the gold or the Bitcoin because of the change in the behavior of the largest actors, these big Bitcoin treasuries and the treasuries for gold, which are central banks of actual governments. Um, that's it. It's gold's cool though. You buy gold. You see, this is why price is such a distraction, in my opinion. And that's why the rules are the most important thing to follow. You want to own more assets. Rule number one, own more gold. All right, great. I want to buy gold when it's cheaper rather than expensive. So that's a whole conversation unto itself. How do you know when it's cheaper? How do you know when it's expensive? That's not for me to answer those. It's for me to define these very broad conceptual types of rules that give people these very high level broad strokes of guidance. And that's what leads to success, not what price you got something at and what price you sold something at. Is own more assets over time. Rule number two, don't pay too much. Try and pay as cheap as possible. Know when to stop buying. Rule number three, make sure things pay you. It's an investor's mindset, dividend investor mindset. And rule number four, the new rule number four, ladies and gentlemen, is don't neglect the cash position. I mentioned it on social media the other day that we now have a solidified rule number four. Rule number four is mission critical because once you have a cash flow portfolio, say you have $1 million producing $200,000 a year, you need to make sure you have proper cash because if you don't, you might be forced to sell some of your assets. And the last thing you want to be doing is forced to sell some of your assets. So you need cash to not become a forced seller. Hope that helps. Fugu, spooky charts. Yeah, it's good charts on this Halloween. Anatoly, thank you. Pleasure. Yam, good morning, Cap. Thoughts on Flex, the new liquidity V2 style market? No interest in new, but possibly interesting. Possibly. I don't like new. Fixed rate is cool, but I don't like new. Peter, good morning. Arrow reclaiming $1. Got 2,500 more arrow, went dip to sub 80. Well, arrow looks good. It was a buck oh 07. Velodrome getting good rip, probably tech narrative. It's almost November, and the Dromos conversation is probably coming back around as that event comes due. Looks good. Zoom out on Bitcoin chart. Sorry, guys, bear with me a second. Be right back as quick as I can. that people actually stuck around. I'm just going to reiterate what I just said on mute. 192 people still on the stream after the captain steps away for a couple minutes to take care of important family matters. God bless you all. I appreciate you all. Let's go through the commentary, see if there's anything else I could finish off the stream. See if we can finish off with a bang today. Arrow reclaiming $1 looks lovely. Arrow with its new launch mechanic is just a wonderful protocol. Obviously, the narrative is coming around with Dromos and the event in November, so that's a big deal in my opinion. The tech of Velodrome and maybe an integration across Aerodrome, Velodrome, bringing base back into the fold and just consolidating everything. That's a big deal, and the potential is just enormous in my opinion. Um, I just love the two products, what they've become over the years. I'm very grateful that I was able to have the exposure that I have and that I had the wisdom to choose to have the exposure that I have. Anywho, zoom out on Bitcoin chart looks very good. Yes, sir, surely does. As I tried to highlight as best I could. DXY looks up only soon. I'm happy to click claim until then. Let's take a look at the DXY. We haven't looked in a while. So pertinent from a DXY perspective. Well, here's your two circles. There's your two crypto bull markets. Last two crypto bull markets, 2020, 2021, 2016, 2017. You could see them just so clear as day from a dollar perspective. And this isn't a full bull market. This isn't really even a bull market because you didn't have the coincidence and the confluence of global money. This is obviously currency. So DXY, referring to the dollar as a currency unit. So this is just a return to the mean, or maybe I don't even know what the hell to call this. This is just a disaster thus far. You don't have a bull market until move rolls over and until yields roll over, until 10-year yields roll over. And we're still slightly above 4% on the 10-year. So you need that collateral price to go up. You need the volatility in collateral pricing to roll over. You need oil to be cheap. And then when your currency rolls over, then you have your bull market. So that's something we have not had thus far. So this is a big trend line dating back to 2008. And this whole region, here was your crisis, your financial crisis, give or take, whereas everything was trying to figure itself out. Years, 2008 to 2012. And then you had your bull market of the dollar since 2008, let's say. And that's what people don't understand. There was a bull market of the dollar. And we're waiting for the bull market to finally reverse because, as few talk about, there's a cyclicality in what's required for the global monetary system to actually function, and that is a weaker dollar. So we want to see this 100 SMA. Oh, look at that, 100 SMA on the 6-month chart. That's actually wild. That is wild. Look at that, tick for tick, right in there. Look at that. Sometimes these MAs are absolutely weird how they play out. Look at that. That's crazy. So you want to see that fail. So maybe that takes another year, maybe some weird stuff. And you got two more candles coming up in 2026. Maybe something weird happens and it breaks to the downside. And for the next 10 to 15 years, we see depreciating dollar. And I won't be surprised because that is written in the history of this chart that there's a cyclicality in the relative value of the dollar, relative value of the dollar. Ramsey's doing great fees on Hyperliquid. Yeah, sure. On Hyperliquid, when does the Arbitrum Ramsey's folks get the airdrop? I'm more than happy to have exposure over on Hyperliquid, given that Sonic is basically dead and Linnea has basically cooled off and is cold as ice. So, all right, Kingdom, let's see what you got. I mean, obviously, I'm not the guy to pick on folks, but they are the weakest exposure in my portfolio. Whatever exposure I have left to the Kingdom It is weak in my portfolio. Good morning, Cap. Happy Halloween, dude. Hope you have a good weekend. Appreciate you very much. Eric, rule number 4, don't neglect the cash position. New rule number 4, absolutely required. Folks neglect the cash position, they become a forced seller. Now, you don't want to be a forced seller. You want to be a seller based on rationality and reason. You want to sell for good reasons, restructuring, pivoting, you know, taking a different approach to things. You don't want to be forced to sell because you need money, need cash. You want to have cash. So you don't have to sell. Made it live. Dean's in the house. How are you? In the gym. No bull or bear market. Just more assets compounding. Thank you, Kat, for keeping us rational. That is exactly right. I don't care whether it's a bull or a bear. I don't care whether someone's scared or afraid or someone's exuberant and greedy. I just have what I have, and it pays great. And I want it to pay more in the future, so that means I get make good choices, hopefully. And we work, and that means we have income there. Never quit your day job. That means and we own assets, which pays us. So we have income there, and we buy more assets, pay us more money. It's a simple equation, and everything else is noise. Just follow the rules. My man Dean gets it. Fugu, yeah, I fixed that. Of course. IF caught up with the live. Oh, there's sound now. Definitely sound. Maybe when I came back on, there was no sound. Peter P, learning to have no emotion about portfolio up and down. That's isn't that the most important thing? That's the hardest thing in the world. There's no emotion. There's no business to have feelings about this stuff. You have rules. You want to buy shit as cheap as possible. I mean, look at Buffett. Buffett, well, not even Buffett. He's done with the game. What he built is Berkshire Hathaway. They're sitting on what, $350 billion worth of cash. That boy did not neglect the cash position. That boy has a capacity to buy businesses dirt cheap. And he's not going to buy them unless he gets a discount, unless he can get them cheap, unless there's a fire sale price, a hostile takeover, a significant crash in the market. But he sure as hell has bought businesses. He's even bought them directly through publicly available stock, which is unlike him. I'm sure he prefers a hostile takeover, you know, 10 cents on the dollar type stuff. But that's exactly what he does. Accumulates cash, buys more businesses. Occasionally, you restructure the portfolio, you sell a business, you get out of something, you pivot. Look at their Apple pivot. Okay. And, we play it at a different level, microscopic level, relatively speaking, but that's okay. And because the game for us, and that's the most important thing I'll end the stream on, is not about reaching a goal, reaching a net worth. The game is the game, the process, it's the journey, it's the methodology that we execute. That's it. So my feeling of accomplishment and my feeling of success and doing the right thing is knowing that every day I wake up and I'm doing the right thing for that day, which is thinking in terms of what assets do I own? Do I can I buy more assets? Are my assets going to pay me on Wednesday and Thursday? And I don't got to make sure I don't overpay for things. And I got to make sure that I have cash so I don't have to be forced to sell my assets. And that's it. There is one other thing that I do think about, and that's pretty much all of 2025. It's because I expect Ethereum and Bitcoin and these markets to appreciate significantly sooner rather than later. So instead of selling the cash flow, it accumulates. So that's longing the market by not claiming. That's the only other equation. And I get tempted to sell, and I'm like, why the hell am I going to sell when Bitcoin's at 110? All right, I'll sell it at 150, at 200, and I'll have more cash. Why? And I'm afforded that luxury to make that choice to defer that income because I have cash and I'm not forced to sell or forced to claim prematurely before I want to in this instance. That's the only other thing I've been thinking about lately. Anywho, crypto take Cap. What do you think about these businesses like Arrow and Velo trading at 3x annualized cash flow? Do you think this is appropriate given the public comps like Robinhood TT trading at 20x? No, of course not. I think these businesses are grossly undervalued. And, I don't, what are the appropriate multiples? What are these P&E numbers? Obviously, in the equities markets, they're grossly distorted, disgusting to say the least. Um, so, probably the only thing that I think about with regard to equities is like market capitalization, because you could kind of say like these are fintech businesses. These are like um, a PayPal or a Venmo or a credit card company. So what's their market cap? So I guess maybe that's the only comparison I really make, not necessarily price to earnings, but I'm like, if you look at um, Abe, $4 billion market cap, why can't it be 100 billion dollar market cap? Come on, it's a big bank. It's the 38th largest bank in the United States. So why does it not have a market cap that's suitable for the 38th largest bank in the United States? So I find that type of inspection interesting, not necessarily cash flow. I think it's all undervalued though, grossly undervalued. That's obviously because we see something before most people do. Most people don't understand what the hell these markets are, and they don't even see them as businesses. They see tickers and prices, and when they see the businesses, and when MSNBC and folks are talking about these things in terms of businesses, then the equation changes, and then they'll start getting priced as businesses. That's my opinion, and I'm sticking to it. Yazika, much a pleasure, my friend. All right, let's wrap it up for today, Friday, October 31st. It's Halloween. Thank you all for joining me. Enjoy today with friends and family. Keep it calm, cool, collected. Spend some time with the kids. I know I will, and it's gonna be a lovely day for them. I remember my youth as a child and Halloween, and I can only hope that my kids enjoy it today as much as I used to. 234 people made it to the end of the stream, and you are all now that much more rational because of it. I'll see you guys and gals next week. Hopefully, we'll have some news over the weekend about the shutdown. I don't look forward to folks experiencing bad things, and I hope everything finishes up soon. And I definitely would like to extend my empathies for anyone who's experiencing anything difficult. Everyone should do the same. We should all be a little empathetic. Just don't let the empathy get toxic. See you guys and gals later next week. Until then, peace.